What's going on? Hello, everybody. Welcome to the live. Can you guys hear me okay? All right, cool. Like I said, New Year's resolution is no more microphone issues. So we're back. Welcome. Today we're going to be talking about some of the best deals can be found in today's market. There's a lot of good deals out there right now. You just got to know where to find them, what to look for, and how to have important conversations. Hey, can we put, you remember those banners? No more banners? What's up, Twitter Spaces? Okay, yep. All right, hey, I am going to show this. I want you to call, well, you probably can't do it with this one because my phone's on Twitter. All right, we're going to show this one. All right, so welcome everybody. We're going to be talking about how to find deals in today's market. What deals are you finding right now? I want to see some questions today. Let's put some questions here in Facebook. Let's put some questions in YouTube, in the comments, on Instagram, on TikTok. What questions do you guys have about finding deals? Do y'all have a deal that you want to analyze? I would love to go through that together if we could. But we're going to talk about how to find deals in today's market. So something we kind of all a little bit expected was that things would, in the residential market for single family homes, showings would start increasing January 1st or at the start of the year. It's now, what's today's date? The 9th? Today is January 9th, and showings have increased. People are going out to view properties. People are making offers on properties. We got multiple showings in one weekend on one of our, well, both of our listings for properties that we are flipping. So that's good to know. Over the last 3-4 months, it's been dead. We've had a listing that just sat there with no offers, barely any showings over the last few months. But now that's starting to pick up. It looks like, a lot of it, I'm sure, had to do with the time of the year, near the holidays, things being really slow. But also, too, interest rates haven't been increasing at the rate that they were increasing at the latter part of last year. And excuse me, and now we're coming into the start of the year and the spring season, and we might start seeing a lot more traffic on houses versus how dead it was the last 3 months. So that's good to know. Over the last 3 months, because it was so dead, you could go out there and you could get some crazy deals. There were some people who were desperate to sell. They had to sell, and no one was willing to buy the home. No one was willing to make an offer on it. But now those listings are getting offers. And a lot of offers that we've made, we're following up with, and they're telling us that, they're now getting some showings coming in, and they're going to hold off on accepting the lower offer and see what comes up with these new ones and all these recent showings. So it's good to pay attention to that, because as buyers and investors, we had a tremendous amount of leverage the last 3-4 months. Now, we had leverage in negotiations, but we didn't have good leverage in terms of debt. The cost to buy properties substantially increased and hold on to them because of the interest rate hikes. Hard money started getting really expensive, and the cost of buying properties increased. And also, too, it made it harder for some of these properties at their values even at the lower values that we were getting to cash flow with debt on the properties. The debt was going to cost too much. Property taxes are still extremely high. And the rents in the residential market, at least here in Austin, have not risen to a level yet based on the other factors where you would cash flow on some rental properties if you were to go out and buy it today. Unless you were able to structure some creative financing deals, which is very possible. There are a lot of people who are open to seller financing their property. There are people who are open to allowing you to buy this property subject to their financing, allowing you to wrap their mortgage and you start taking over the payments. So it is possible to find some of those deals. But it hasn't completely changed, but there is a little bit of a shift, more so with buyers being more active this last week or so. So pay attention to that, but there's still great deals on the MLS. I was talking to a listing agent this morning, and they were a little bit excited about having more traction, having more showings, having potentially more offers coming in. But they did mention that there is still a tremendous amount of inventory out there. So, they're not getting their hopes up just because they're getting a few more showings. These buyers still have a lot of choices to choose from when buying a house. But there is still good deals out on the MLS. Everybody on the MLS who has their property listed, they've already agreed to sell their house. They've already said, I want to sell this house. I agree to sell my house. I'm putting it on the market. Let's get some offers come in. I'm going to choose one of these offers and I'm going to sell it and move on. So the MLS is a great place to start. It is full of people who said that they want to sell their house. Now, your job as an investor is going to be to go in there and try and figure out, what price do I need to get this at in order for this investment to make sense? I'm hoping that things have kind of leveled out a little bit, and either we stay level for a little while and start to rise up, or we start to get that coming back. But it could be what Cat likes to call a dead cat bounce. And if we start to increase, and who knows what's going to happen with the Federal Reserve and what they're going to do with rates, and all of the monetary policy that they're taking action on. But maybe they start to take more. Maybe inflation isn't as tamed as they think it is, and maybe the market goes back down again. So I'm unsure what's going to happen, but there is deals on the MLS. It's your job to go out there and find good deals that make sense. But the reason I mention all that with becoming level and hopefully starting to go back up is, if that's the case, then, and we have hit a little bit of what we would consider a bottom, and we feel comfortable being able to predict and evaluate what market price is and what market price will be, then we can start taking more action on buying low and selling high. So we can flip properties, we'll have other investors and people feeling the same way. Therefore, they're going to want to take on more investment properties. But it'll be important to make sure that we've fully established, what we would consider that bottom level in order to establish what we feel market values will be. But the MLS is one way to go out and find some great deals in today's market. Do we have any questions or comments? Who's got some deals? Bring some deals. We got all these people who join the lives every week. I think we've got 100 people here right now collectively. So who out there has a deal that we can analyze and look at? I want to see if we can analyze a deal with you guys and get y'all to take action on making some investments in 2023 in today's market before things change a little bit. All right, so MLS is one way. We cover, what did we cover last time? You remember? Look for some seller finance deals. I don't know if we covered this last time or not, but seller finance deals, we've been talking about it a lot. This is a great way to get deals that would make sense to hold on to and potentially even cash flow right now. We've got 3 duplexes on a street in Round Rock, Texas. Is Chris Sweeney in here? Where's he viewing from? Facebook, TikTok, or Instagram? All right, or Twitter Spaces. So we've got 3 duplexes that we bought on Red Wing Way in Round Rock, Texas. These are good duplexes. They're 3.2s, which is great. The market rents on them are around $1,900 a month. We've got some units we rented out for $2,100. We got some units we rented out, I believe, for $1,900, maybe $1,875, but it's about $1,900 a month we can get in rents on these duplexes. So let's run the numbers there. 1,900 times 6 units is $11,400. Hey, by the way, can y'all hear me okay? Just making sure. All right, so $11,400 a month in rents. Let's multiply that by 12. Let's look at it on an annual basis. I want to run y'all through this deal. We bought it about 5 months ago, 5-6 months ago. All right, so the annual income, and this is not including other income such as late fees, pet deposits, pet rent, things like that. But these 3 duplexes in Round Rock, Texas, 6 units. They bring in annual income of $137,000 approximately. Again, not including other income such as late fees, pet rent, pet stuff, things like that. They pay their own utilities. It's individually metered. The management and operating expenses on it. Let's run some numbers here. Well, first let me cover how we bought it. So we bought it with seller financing. I think the purchase price was, Chris Sweeney, what was the purchase price? Can he comment in there? What was the purchase price, Mr. Sweeney? We're going to analyze Red Wing today. I think the purchase price was $1,125,000, correct? Divided by 3. Yeah, I think it was $1,125,000. $1,050,000? 1,050,000? I don't think we got them that cheap.
Sounds close.
Divided by 3. I don't think we bought them for $350 each. That might be the principal balance we owe. Huh? What? Okay. Yeah. So we bought it for $1,125,000. I'm pretty positive. Now we had to put down a down payment. We got it seller financing. So Chris Sweeney, entrepreneur here at TRE. Go give him a follow. What's Chris Sweeney's TikTok?
My Austin Home.
Go follow My Austin Home on TikTok. Christopher Sweeney, entrepreneur in Austin, Texas. Chris Sweeney found this seller. He was cold calling, I believe, for one of his investors. One of his investors bought a duplex on that street. And so Chris started cold calling the other duplexes on that street. And he found this guy who said, yeah, I'll sell my duplex. I think we got him to agree to sell it for like $380. And then we went and met him at the property. These properties needed a lot of work. He didn't have insurance on them. He owned them free and clear. And he hadn't done much, if any, maintenance to these units in a long time. And the tenants were not too happy with him as a landlord. But we got him to agree to sell one duplex for $380, I think. And then we found out he owns two others on the same street. One and the other kind of right next to each other, and then one all the way at the end of the street, but not too far, maybe a 30-second walk. And he said that he would sell all of them. Now, paying taxes on the sale here was really important to him. He did not want to pay taxes within the next 3 years or so for whatever reason. I forget his individual circumstances that was important to him, but it was important to him for us to not buy these cash or go get a loan and sell them all at once. But he did agree to seller financing. Now, what we needed to do was figure out a way to make seller financing make sense with this deal. We're buying them at $1.125 million. At the time, his rents were not that much. At the time, his rents were about $6,100 a month. So they were severely under rented. But again, he also was, if you're watching, I apologize, but he is also a pretty bad landlord and didn't do anything to these units. So they're in pretty bad shape. But they were about 80% below. The rents could have been increased from this number by about 80% plus. And we did that when we came in and renovated the units and signed lease renewals. But at the time when we bought it, his rents coming in, his income was $6,100. So that's like $72,000 a year, I believe. 72,000 divided by 12. Yeah, it was about $72,000 a year that he was bringing in rents. So with the seller finance, we needed to figure out how can we have our payment be less than our rents. And we're also going to have management. We're also going to have taxes. We're also going to have insurance we have to pay. And we negotiated a payment. We, fluctuated the interest rate, the amortization, interest only. And we told them we need our payment to be, I think it was around, we negotiated a payment of like our mortgage payment, our debt was about is about $5,100 a month. So it's about 5,100 times. It's about 61. Dang it! It's about $61,200 a year. $61,200 a year is our debt. Now, at the time, our rents were barely going to cover that, but we knew that we were going to come in here and increase rents and update the units. One tenant, his lease ended, I think, the day that we closed and funded on this property. He did not want to stay. He was not happy with his previous landlord. Even though we were new ones coming in, we told him we were going to take care of it. We didn't necessarily want him to stay. His rent was about like $1,100 a month. And he took pretty good care of this unit. All we had to do was clean it, and then we turned around, got it leased out for I think $1,900. So we were happy that that lease was ending the day that we bought it because we just increased the rents by 90%. But we knew that we had to raise these rents, and we did end up raising the rents. And if you take this 137,000, you divide it by 12, that puts us at about 11,400 bucks a month in rent, and that hits this 1% rule for us. Remember, we bought it for 1.125 million, and we're renting it out for 11,000. All the units, we're renting it out for 11,400 bucks a month in rent. And we have accomplished the 1% rule and coveted Austin, Texas MSA. Now, we did have to put some money into it. 2 units needed about, I think we got 2 units fully renovated, and we had to do a lot of stuff in there, but we got 2 units fully renovated for about $16,000. We had to take care of a lot of other issues like leaks that were coming through the ceiling. All these tenants had garages that wouldn't open. It seems like the day we bought it, and every time, ownership transfers and there's a new property manager, a new owner coming in, the tenants are flooding maintenance requests. So the day we bought it, we introduced management and we started getting all these maintenance requests coming in. The other crazy thing about this story I didn't even mention is that while we were under contract, there was a freaking tornado that came through Round Rock. A tornado came right down the street and just started bing, 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 binging down the street. And a lot of people were, got hit really hard by this tornado. It was crazy. But we're under contract with this guy. A tornado comes through and rips off one roof, rips off another roof. Didn't really affect one unit at the end of the street. It knocked off the chimney, and we had to get the seller to agree to fix all these things. He had to put a new roof on one of the units. He had to patch up another roof on one of the units. He had to re-insulate all these things. There was water damage. He had to fix the chimney. There was issues with siding. I mean, this was crazy. This tornado that came through and really just demolished a bunch of stuff. Thankfully, these were not demolished, but they were affected. And so that was another thing that we were dealing with was it was hard to say. I mean, we didn't go through it and document every square inch of this property the moment we went under contract, but it was hard to say to the seller in what condition was it in prior to the tornado while we were under contract, because he had the legal obligation to bring these properties back to their original condition when we went under contract. But it was hard to argue these things because we weren't, I mean, there's a few things that were obvious, but there was a lot of things that weren't. Was this water damage before the tornado or during or after the tornado? Was this hole in the siding before the tornado or after the tornado? This missing, light fixture, was that because of the tornado or after the tornado? The things that were obvious were like the fence, the roof, and a few things where, siding was affected and he replaced the siding and had to repaint the siding. But there were a lot of things that were kind of up in the air and ambiguous on who was right and who was wrong and what condition did he need to bring these properties back to. And it was a little bit of a fight and battle to get him to fix those things, but it was still a good deal. We knew that we were going to be able to raise rents about 80-90%. We knew we were going to get it up to about this 1% rule, which we did. And now it's fully stabilized. We got great tenants in there. We've taken care of all the deferred maintenance in the properties. But let's run through the financials and see what the numbers look like for cash flow at the end of the day after all this. And one of the reasons we were able to do this was because of seller financing. So we structured a good payment, a cheap payment of about $5,100 a month, and we were able to buy it with about 10% down. So we put about, I think it was about $100,000. We put down maybe $110,000. We put down 10% versus a little bit less than 10% versus 20, 25, 30% we would have had to come out of pocket. So that was good too. But let's run the numbers. So management, $137,000 in rents times 0.07. So management's going to cost us expenses. Management's going to cost us about $9,600 a year. Taxes, we just paid them. It's about 9 times. Taxes are crazy. It's about $27,000 a year in taxes. Insurance, it's about, I think it's about 150 times 30. Yeah, insurance on them, I think this is accurate. I think it's about $5,400. Let's call it $6,000 a year. About $2,000 per duplex. And then let's account for some maintenance. And this is also assuming, just FYI, 100% occupancy, which they currently are 100% occupied. But let's assume, maybe about, conservatively, let's assume about $650 a month in maintenance with these units for all of them. So let's just call maintenance $7,800 a year. And let's run our numbers. All right, so starting with our income of $137,000 minus our management $9,600 minus our property taxes of $27,000, which we just paid, minus our insurance of $6,000 minus our maintenance of $7,800 a year puts our NOI at $86,000. $86,600. If you were running this as a commercial deal, let's figure out the return that we're getting on this NOI versus the purchase price. Now, we did put money into it, like I mentioned. So for the purchase price plus the rehab that we put in, let's call it 1.15. So 1150. All right, let's take this 86,600 divided by 1150. It's great. It's providing us a 7.5% cap rate. If we were to buy this property cash, we'd be getting about 7.5% on our money. But we do need to subtract our debt because we do have debt. So we're going to subtract our debt, which is $61,000 a year, from our NOI of $86,000 a year. And that gives us 86,600 minus 61,200. So net cash flow, our net income is $25,400. That's beautiful. we would have been negative on this property had we not we would have been negative on this property had we not raised these rents and updated the units. One moment, I gotta get a refill on my marker. All right, so we make about $25,400 a year in cash flow. And remember, we put down $110,000 plus we had to put in about $25,000 worth of repairs. So $110,000 plus $25,000 puts us at the cash we put in is $135,000. So let's see what our cash on cash return would be. So 25,400 is our net income, divided by 135,000. It's not right, is it? Are we getting an 18% cash on cash return on these duplexes? That's pretty great. So we're getting $25,000 a year. We put in $135,000. There's going to be more expenses that come up along the way, but all it's going to take is about 5 years for us to cash flow this amount plus more. Rents are going to continue to rise. And just because our rents are rising over the following years and we raise rents, it doesn't mean that our expenses are going to increase. Taxes will likely increase. Insurance may increase, but maintenance is going to cost the same. Property management will increase based on the rents, but we're going to increase our cash flow every year as we increase rents. And so it'll take, about 4 to 5 years to get our money back. That's a great deal. What do you guys think? And this was all structured with seller financing. It probably wouldn't have worked if we would have went to a hard money lender or we went and got a loan from the bank. But we structured a great seller finance deal. There's a balloon payment in 3 years. So in 3 years, we've got to either refi the loan or sell the properties, but we'll likely want to hold on to them. But this turned out into an amazing deal when at the start of it, it looked like it was going to be chaos with the tornado that came through and everything else. But these are deals that you can go out and find right now. There are sellers that are willing to seller finance their properties. And you can even buy these with $0 down. You don't have to put in $135,000 to buy a duplex or to buy a rental property. You can structure seller finance deals that don't cost much or require $0 down. It's 100% flexible. Nothing is required, and you can negotiate it any way that you want to. What do y'all think about this deal? Would you buy it? What questions do you have? What questions do y'all have on this deal? I'm gonna have to come around to this side to read the comments because my help left. All right, what comments we got in here? Anyways, go out and find some seller finance deals. You can assume people's mortgages. I know that we've talked about that. But seller finance deals are great ways to come into this market specifically with higher interest rates and structure good debt terms. We're really happy with this deal, and the seller's really happy with this deal too. He's building some quadplexes or something out in Georgetown, and he did not want to sell these properties cash, but he also didn't want to continue to own them either. And we're going to try and buy his other properties over the years to come. So MLS is a great way to find deals right now. This was off market, but every time you're looking on the MLS and you're working with an investment-friendly realtor or real estate agent, ask about seller finance deals. Every offer we make, we ask about seller finance deals. Would the seller consider seller financing? A lot of these sellers are not able to get the price that they want for somebody to come in with a loan or pay cash. And so they're going to be more open to seller financing it if it makes sense for them. And a lot of people are open to it. So if y'all got some deals, let's go through them. I told y'all this morning I wanted to answer some questions. What questions do people have? I'm sitting down. What questions do people have? It's a good question. How can you buy a property with $0 down? Well, you can buy a property with $0 down through seller financing is one way. With seller financing, everything is negotiable. You don't have to, there's no standard for down payment. There's no standard for interest rate. There's no standard for origination points. There's no standard for term. There's no standard for all of the factors that come into a loan with seller financing. If you can negotiate it and it makes sense and both parties agree, then that's what the deal is. You could structure it with $0 down. You could structure it with a 0% interest rate, meaning all of your payments are going directly into your principal balance of the loan. You could structure a seller finance deal. Typically, mortgages are 15 or 30-year mortgages, but you can structure a seller finance deal with a 200-year mortgage. You could structure it with, a loan that has amortization over, 500 years. Whatever you want to do, you can structure it in seller financing. But the most important thing is you just need to ask if they're open to it and be able to be creative to adjust the deal and structure it in a way that it does make sense. But I explain it to people with seller financing just very simply. Hey, here are the numbers. I know that you don't want to accept this low cash offer, but we can't pay the price that you're asking, get a loan, and expect to make money on keeping it as a rental. We're going to lose money every single month. And we don't buy real estate and invest to lose money. We'd be the worst investors ever if that was our strategy. So our strategy is to make money when we invest. But we could potentially buy this property near the price that you want if we can structure seller finance a seller finance deal where the payment makes sense versus what we're getting in rents, what our operating expenses are. And so I'll just run them through the numbers and I'll say, okay, realtor or seller, what is market rents? What do you think I'll be able to rent this thing out for? $2,000 a month? Okay, good. All right, so I can rent it out for $24,000 a year. I can rent it out for 24 grand a year. What are property taxes? 6 grand. Okay. Minus 6,000. Okay. My insurance on the property is going to be, I imagine you're going to require I get insurance if you're seller financing it to me. So I imagine my insurance is going to be around 2,500. On the 24 grand, I'm going to have to pay a property manager. So 24,000 times 0.07 or 7%. It'll be about $1,700 a year in management. And so as of right now, without even considering leasing fees, any vacancy, maintenance, or any problems that come up, just to break even without considering those things, minus 6 grand, minus 2,500, minus 1,700. I would need my payment. So that gives us a balance of 13,800. And again, this is not accounting for maintenance and other things. But I would need my payment to be about $1,000 a month. This is what my mortgage payment has to be. I need my mortgage payment to be about $1,000 a month in order to just break even on this. If I don't have a payment that's $1,000 or below, I'm going to be losing money every single month. And you just break it down like that. And I explain it to them. How is anybody going to buy this as a rental, get a loan on it, and not lose money? Why would anybody do that? What's the play here to lose money every single month? Someone could come in and buy it cash, but still it's not going to be a great deal unless they're buying it at a good price, which I'm trying to do with you with my cash offer. But if you can't sell it to me at the cash offer and you need to be at a certain price that's higher than the cash offer, let's structure a seller finance deal where I'll give you a down payment. I'll pay you a mortgage payment every single month. But in order to just break even, and again, this is not counting for maintenance and leasing fees and other costs that are associated, but just with taxes, insurance, and management, I need my mortgage payment to be $1,000 a month. Otherwise, I can't buy it, and I'm going to lose money every single month. And when you explain the logic of the numbers, then of course it makes sense that the payment has to be $1,000 a month here in this scenario in order to just cash flow. So long story short, the way that you can buy a property with $0 down is you ask. You structure a seller finance deal like this. You run through the numbers. You explain it to the people that you're talking to, and you find a seller who'd be willing to seller finance it to you with no down payment. Any other questions?
Chris says 50% more.
Right. On what? The mortgage? Yeah. All right. Well, next time, thank you everybody for joining today. Next time we come, bring some questions. I want to analyze some deals with you. We are going to have a webinar at the end of this month. Make sure you sign up for it. The links are in the bio. And you have to sign up for the webinar. We're actually going to be covering the question I just talked about, how to buy real estate with $0. Even if you got no money, how can you invest in real estate? It's very possible. There's so many different ways to do it. Investing in real estate does not require capital. It doesn't require cash. All it requires is knowledge. And we are going to teach you this knowledge. It's going to be a Saturday, I think January 28th at 11 a.m. For everybody here who's tuning in at work, you got a 9-to-5 job. This webinar will be on a Saturday. We wanted to make it available so that anybody could join on the weekend. It's free, but you do have to sign up. There is limited spots available. Links in the bio. How to make money in real estate even with $0. One last announcement is we do have our wholesale course that's launched, and we're running it for 50% off right now. The coupon code is TRE, all lowercase. That link is in the bio too. But wholesaling is also a great way to go out there and make money today. All it requires is maybe like $10, $5 in earnest, $5 in option, and you can make 10 grand plus in wholesale fees. Me, Matt, and our partner, we've made $700,000 plus wholesale fees. So anything's possible, but you need the knowledge again. You need the knowledge to know how to go out there, find deals, get them under contract, find buyers, take it all the way through the title process, get it sold, and collect your wholesale fee. So that course, we're running it for 50% off. This is for everybody here who has New Year's resolutions of wholesaling or making money in real estate or starting investing. We're giving it to you for 50% off because we want to see you take action. You need the knowledge. It's going to tell you everything you need to know about taking action today. It's not a long course. It's not going to require that you do a whole lot. It's about taking action. It's the exact steps that you need to take to start making money. If you took it today and you got it today, you could start making money in wholesaling tomorrow or even today. If you went through the course right now, tonight you started taking action, you get a deal under contract, go find buyers tomorrow and start making some money. It's 50% off right now. Coupon code TRE, all lowercase. That link is in the bio. We're not going to offer it for 50% off for long, and it's going to go back up to its normal price of $9.97. But right now, 50% off. Go grab it. See you at the webinar, and see you next week when we go live and analyze deals.